What if there was an AI company so strong that it became Nvidia's largest public position? And what if that same company doubled its revenue year over year, yet its stock just crashed almost 40% in 2 weeks? That company is CoreWeave, ticker symbol CRWV. Let's break down what they do, why the stock fell, and why it might be one of the best long-term opportunities in AI right now. CoreWeave is building the Amazon Web Services of the AI era. They provide instant access to massive, high-performance computing infrastructure for companies that can't spend billions or wait years to build their own. They currently operate 41 data centers across North America and Europe, holding over 300,000 Nvidia GPUs. They have more than half a gigawatt of active power and nearly 3 gigawatts of contracted capacity, enough to support more than 1.7 million GPUs. Their customers include AI labs, enterprises, and hyperscalers. AI labs use CoreWeave for training massive foundation models. Enterprises rely on them for inference workloads that demand reliability and speed. Hyperscalers like Microsoft and Google use CoreWeave for overflow capacity when demand spikes. CoreWeave's secret weapon is reliability. Just like we have power plants for everyday electricity and peaker plants for high demand, CoreWeave acts as a compute peaker, providing backup infrastructure when AI workloads surge. Those peaks are far less predictable than electricity demand, often triggered by viral AI launches or breakthroughs. That's why even the biggest players depend on CoreWeave to prevent compute shortages. This strategy has landed them some enormous deals. OpenAI recently expanded their agreement by $6.5 billion, bringing their total partnership value to over $22 billion. Microsoft has around $10 billion in contracts with CoreWeave to power Azure AI, Bing AI, and GitHub Copilot, accounting for 62% of CoreWeave's 2024 revenue and 35% in 2025. Meta Platforms signed a $14.2 billion deal to run and scale Llama models through 2031, and Nvidia itself has a $6.3 billion partnership to buy any unsold compute capacity through 2032. Now let's talk numbers. CoreWeave just reported $1.36 billion in quarterly revenue, up 134% year over year. More impressively, their revenue backlog hit $55 billion, nearly 4 times higher than last year. 40% of that backlog covers contracts under 2 years, another 40% spans 2 to 4 years, and the rest extends beyond 4 years. That gives them predictable recurring revenue and clear growth visibility. Their entire market cap is only $43 billion, meaning their committed revenue is already worth more than the company itself. So why did the stock crash? 3 main reasons. First, heavy capital expenditures, $1.9 billion this quarter, led to a $110 million net loss. Operating margins also dropped from 20% to 4% because of massive stock-based compensation. Second, they cut 2025 guidance by 3%, mostly due to a construction delay at one data center. That's a short-term issue expected to be fixed next quarter. And third, Michael Burry, the investor famous for The Big Short, just bet over $1 billion that AI is the next bubble. He believes companies are overstating profits by stretching GPU depreciation schedules, but Nvidia's software ecosystem tells a different story. Updates like TensorRT LLM have doubled GPU efficiency, effectively extending hardware lifespan, making longer depreciation reasonable, not fraudulent. CoreWeave's costs are high because they're expanding aggressively, not because their business is broken. They're building infrastructure the entire AI economy depends on. Their model is similar to selling picks and shovels during a gold rush. Essential, scalable, and incredibly valuable over time. At today's price, CoreWeave trades around $85 per share, down nearly 40% since early November. Independent valuations peg its fair value near $420, suggesting it's 80% undervalued. For a company with triple-digit revenue growth and a $55 billion backlog, that's remarkable. In my view, this isn't a company burning cash recklessly, it's one laying the groundwork for long-term dominance. Their customers are locked in for years, their capacity is expanding fast, and Nvidia's backing gives them access to the best AI chips before anyone else. CoreWeave is building the infrastructure that will power the world's most advanced AI models, and the market seems to be missing that. So while short-term investors are panicking, long-term investors might be staring at one of the biggest asymmetric opportunities in tech right now, because sometimes the best way to get rich isn't by getting lucky, it's by recognizing the future before everyone else does. Want to know how we trade this major technology trend? At Truthsayer AI, we trade every single one of the alerts our AI generates. If you're interested, you can join the thousands of clients already using our app to capitalize on these trades every day. Remember, we trade every one of the alerts our machine learning and AI models produce. Sign up on our website, you won't regret it. Thank you for watching, and don't forget to like and subscribe.